Welcome to The Real Build. I'm your host, Jamila. We have our co-host, Andre, here with us today.
Hello, everybody.
I can always count on Andre coming in so we can banter.
Of course.
We have a really cool guest with us here today. Now, he doesn't know this. I'm a little bit of a fangirl. I have been investing in real estate about as long as he's been in this city promoting real estate investment. I've watched his career grow, and we've talked to each other throughout the decades in the city of this going on, and I'm excited to have him on the show today. AJ Hazzi, thanks for coming.
It's awesome to be here.
So AJ Hazzi, owner of Vantage West Realty, developed that ecosystem with the baseline of offering real estate investment opportunities to buyers as well as home buyers, and created a fantastic team of realtors over there, an entire team of property management, so that he can really service that real estate investor with a full service. We'll manage the property for you. We'll help you find the property. We'll make sure it's a good investment. And you have flourished over the couple of decades doing this.
It's been a run, that's for sure.
How did you get started? Like, how did you know what services you wanted to add to your existing ecosystem? How did you know where there was kind of lapses in the market? Where did that idea come from to kind of create this one-stop shop for everything?
So I started my career in 2002, which was just after the sort of dot-com bust era.
Mm-hmm.
And so that was sort of the kind of first post-crash accumulation phase.
Mm-hmm.
And so I did acquire a decent number of rental properties during that period.
Mm-hmm.
And then in 2008, right before the big global financial crisis, I thought, well, heck, I better start my own brokerage. And I didn't really know at that time that we were going to be investor focused.
Right.
But once the market crashed, the only people that were getting off the sidelines, because it takes a very contrarian approach to buy when everyone else is telling you to run for the hills.
Yeah.
And so because I had been doing the investing and because I was a member of the Real Estate Investment Network and I was in the right rooms, it made sense for me at that time to sort of pivot and really focus on servicing the needs of the investor. So
Right.
I started working on foreclosures and helping people with flipping and even investing some capital down south in the United States. During that period of time, we became well known as, a full service for investors to help you acquire and or sell. It wasn't until about 2012 that we had built such a large portfolio, my wife and I, that it actually just made sense to bring in-house our own stuff. And then we kind of layered it on from there.
And it's because in 2008, that's when I started learning and investing in real estate. Shortly after that, that's when I read Rich Dad Poor Dad on the beach in Mexico, and I was like, this makes perfect sense to me. But at that time, like, the real estate investing mindset wasn't really everywhere. It was very few people, and you were one of them in the city, and you were very public about it, and you were going after it, and you were creating opportunity when everyone thought the sky was falling. And I was a fan of that. I was watching what you were doing and listening to your advice, and it's great when you find other people that have that investor mindset. And there's people who also look at that and they're like, oh, there's no way that's gonna work. But here we are, 23 years later.
Yep.
And we're back sitting in another cycle. But before we get into that, let's keep going on your journey. So in 2012, that's when we started to get more of a bit of consistency in the market.
Yeah, we got some growth again.
Yeah, we entered the recovery phase.
Yes.
Yeah.
So in 2009, things turned down and we kind of traded sideways for a few years while things kind of evened out. And then in 2012 was when we first started to see the signs that we were entering into the recovery. The days on market started to shrink. The active inventory started to come down a little bit. Sales started to go up. So the whole, supply and demand dynamics were starting to shift. It was still a buyer's market, but it was those first indicators that you knew that it gets better from here.
Right.
And that was one of the things that I had learned in REIN with the book, The Secrets of the Canadian Real Estate Cycle. Don Campbell explained how the market is cyclical and it doesn't ever change its order. It goes from boom to slump to recovery to boom to slump to recovery. And within each of those three segments, there's trimesters, if you will. You have a beginning, middle, and an end.
Yeah.
And there's a corresponding set of data points or influencers that you can watch to see where you are, beginning, middle, or end of the boom, the slump, or the recovery. And so once you know that, then it's easy to kind of read the tea leaves. And so I was able to ascertain in 2012 that it was really time to get back on the gas. And I started writing for Castanet at the time.
Ooh.
And that was right when I got my column. And I started telling people that they should consider getting a HELOC on their house and buying some more real estate.
Right.
And I took a lot of abuse from that.
Yeah. Yeah.
There was a lot of people who
I
thought
remember that. Yeah.
Yeah.
But I did open up lines of credit and start buying at that time. So thank you for that advice.
I think anybody who listened to that, and I don't think there were that many, but those that did take the contrarian approach were quite happy they did 10 years later.
Now, you mentioned some markers that, you kind of see during that recovery phase. What are some of those that we saw in 2012, and are any of those kind of applicable today that you're seeing come back up?
Good question.
Yeah, great question. And when I was just sharing this with our group of agents and our investors, I showed that we are pretty well right at that 2012 place now. We're right at the beginning where things are shifting from end of the slump to the beginning of the recovery. And so the things we're watching are obviously the absorption rate, which is, the number of sales each month divided into the number of active listings.
Sure.
And so when we see that starting to edge downward, that's a pretty big indicator. When you see days on market coming down, that's a big indicator.
Okay.
When you see that the average discount is starting to change. So we went from, say, a 4% average discount to now it's only a 3%,
Right.
which just means the balance of power is slowly starting to shift back towards the seller. By no means a seller's market, but that deep discounting is starting to evaporate.
Yeah.
So those are the things we're watching. There's other things, too, that you look for that are not necessarily showing up yet, like GDP increases is a big one.
Of course.
Usually you start to see a little bit of upward pressure on rental prices. We're not seeing that right now. But a lot of the indicators right now are pointing towards recovery. We're not in the full throes of the recovery just yet. It's those early green shoots that let us know that this window, the buying opportunity, is now and probably for the next couple of years.
Yeah. So AJ just put on a really great seminar last week, hey? Was it last week?
Yeah, last week.
And Andre and I, we definitely had to come and hear you. Because when you're in a market like this where it is like feeling like, oh, it's time to buy, it's definitely nice to have that refresher, like information, surround yourself with some like-minded investors, see what's going on, see if what you're reading in the tea leaves is what everyone else is reading in the tea leaves. It was a great seminar and a lot of really good information. One thing I asked you, I'd love you to share with the listeners, was rental rates. So you just touched on that. There is a lot of inventory. We've talked about it on the show. There's a lot of condos, 2-bedroom, 1-bedroom condos. My question was, do you think that rental rates are going to plummet? Like, are they going to keep coming down? Like, what is your guess there?
It's a great question. I mean, we do have a decent glut of inventory on right now. There's two things at play. There's the condos that are now at completion, some of the bigger projects, and people who bought those that had no intention of moving in probably thought they were going to do short terms. Those rules changed.
Yep.
Now they're putting those condos out into the rental market. Now they're coming on at $3,000 a month for a 2-bedroom.
Yeah.
So not competing with necessarily your 2-bedroom basement suite, but it is putting a lot more stock into the rental market, which is putting downward pressure on prices.
Yeah.
Now at the same time, because of all the incentives, there's been some purpose-built rentals that have come on stream, and those now are for occupancy. So you're seeing a lot of incentives, first month free, sometimes even more than that in terms of incentives, which is, again, creating some short-term downward pressure on prices. So for me, because we're building this product, I'm being very cautious, but my bear case is that we'll see rental prices come down another 10% for a period of time, and then we'll slowly work their way back up. So bear case is 10%. I think base case is probably another 5% in softening.
Okay, so that's good news. We'll dive more into that. We're going to take a quick break. AJ, thanks for being here. Stay tuned. We're going to keep talking about where this market's going, where the opportunity is, and also with the government decision made, where's the opportunities there as well. Stay tuned. Welcome back to The Real Build. I'm your host, Jamila. I've got my co-host, Andre, with me here today.
Hello, everybody.
And we have a really cool guest on with us, AJ Hazzi. Thanks for coming.
My pleasure.
Andre and I had the pleasure of sitting in your presentation, just reflecting on real estate investment, the industry, where the opportunities are. And we're like, we need to have you on. We got to talk about this.
Well, I was really happy to see you guys in the audience. I was hoping that some sophisticated investors would show up, and you guys sure did. So that's awesome.
Thank you. So we left off the last break. We were talking about rentals. We all know there's a lot of 2-bedroom condos available in the marketplace. Something I really appreciated was your feedback. We're talking about reading AJ's tea leaves right now on what he thinks is going to happen going forward. Right before the break, we're thinking 5-10% adjustment in pricing around those 2-bedroom, 1-bedroom units. Keep in mind, basement suites do fall into that category. So the preference between a basement suite with windows 3/4 up, but yet it's on its own property versus a condo, you're going to take that in consideration when you're thinking about your real estate investments.
And we kind of touched on this off air, and it's the concept of like flight to quality. So for those that don't know, the idea generally is that as you see downwards pressure on lease rates or tenancy rates, clients or tenants might choose to opt for a higher quality product at the same price that they were paying before in a hot market, but now they're able to get that at a discounted rate to what it was before, even though it's a little bit more than the kind of crappier suite that they could now get at an even lower price.
You're right. And it's kind of the perfect setup for that right now, because as I was mentioning, there's all of these new condo projects that are now at completion, where the people who bought them had no intent to move in. So now they're competing with all of their other fellow investors. So there is that downward pressure. And so suddenly something that would have been, say, $3,000 or $3,200 a month in a hot market, some people are giving that away at $2,500, $2,600. So if you were in a $2,200 a month, very basic place, it's not a big stretch to get up to $26,000 and really improve
your quality. Yeah.
So the product's there. That's the big difference. Normally that flight can't happen because there's nowhere to fly to. But right now there certainly is.
Exactly.
Well, and one thing we did talk about was where we all know Kelowna is not producing more single-family homes, at the rate they're producing condos. So single-family homes, 3-bedroom product, 4-bedroom product, we touched on, are still holding their rate. There's not a lot of competition in this space. It's a good product to be renting today.
Yeah, I mean, I was even looking at Marketplace just to check on single family homes, and to find a single family house that you can have the whole thing and have a yard, it's like there's almost none of that out there. You can kind of ask what you want for it. Yeah,
on Thursday we had a meeting with our property managers, and we manage about 1,300 properties locally, and I asked them, I said, what is the easiest thing to rent right now? They said a 4-bedroom house where you get the whole thing. And I said, what's the hardest thing to rent? And they said a 2-bedroom basement suite.
Yeah. The options are endless for those. Yeah.
Where the real oversupply is, from what I can tell, is in the 1-bedrooms and the bachelor suites. Because on paper, when you're a developer and you're trying to make a project make sense, their money per foot is the highest on the smaller units. And so you're trying to maximize your rental revenue per foot. And so naturally you're incentivized to put these 1-bedrooms out. And then of course the city chimed in and said, well, if it's a bachelor suite, you don't pay development cost charges on it. And so then you have all of these projects coming out with tons of bachelor suites. Well, that's a pretty narrow market of people who want to live in 300 square feet.
Yeah.
Right.
Yeah.
And that seems to be quite transient. And then now you take away the students, the international students to a certain extent, and who's the market for those bachelors? So that is, I think, where the most downward pressure is. The highest vacancy is in those bachelor suites and even 1-bedrooms.
That makes sense, especially with the Airbnb. Like a lot of those developers created the units to sell to investors who at the end of the day use them for Airbnb purposes. Now that got completely wiped out, and so you've got a whole bunch of essentially hotel rooms that can't be used as hotel rooms and have to be in the long-term rent supply.
So there are tricks of the trade, though. If you do have a property, a bachelor suite or a 2-bedroom, and you're looking to put it up for rent, or you're feeling this where your tenant that had been there for 2 years playing top dollar because you got them at a great time is just giving you notice because they have found something else at a better deal and you got to rent it. I have done in the past where I offered cleaning. Mm-hmm. So included in your rent, the cleaner would come in once a month for 2 or 3 hours, depending on the size of the place, and do a clean for you. And it was great. Tenants love it. On the other hand, I get my cleaner in my home, making sure that it's upkept. It's kind of a win-win. But there's lots of strategies. I'm sure you guys have a few.
Yeah, and really the thing is you have to reframe the whole adversarial relationship that we often take with tenants. You really have to see them as your partner.
Yes.
Right? They're the ones that are bringing the revenue that's paying that mortgage down. They're the ones that are caring for this asset. And so seeing them that way, in that light, makes a lot of sense as compared to, somebody that, you're trying to keep at arm's length and just hope you stay out of the tenancy courts.
Yeah. Yeah, I don't know if you guys know who Ben Mala is. He's a big commercial property guy, and he has the exact same mindset of like, these are my clients. I want my clients happy because my clients are the ones who, provide the revenue for the building that way. Mm-hmm. So
what are some other tricks of the trade for like, what are things people are looking for that you could set yourself ahead of the competition if you had a 2-bedroom for rent right now?
When you nailed it with the cleaning, we do that for on-time payments. If you do 6 on-time payments, we'll do a full deep clean.
Cool.
So that's a good option for sure. And there's other things too. You can get the community involved as well and put together local discounts and things like that. So, if you're in a neighborhood like McKinley, or you're in a neighborhood, whether even in Rutland, there's local businesses that you could probably get aligned on the idea of coming together and creating a bit of almost a club. Right?
Cool idea.
And so trying to create some community around it. You could do, parcel delivery, like free Amazon accounts. There's lots of different things you can do.
DoorDash gift certificates.
Oh, that's great.
Yeah.
Yeah. Absolutely.
Little incentives go a long way sometimes.
Yeah. Absolutely.
Yeah. So, okay, we right now, election is over. Everyone can breathe.
Yeah.
We can go about knowing, it's not that, maybe your party won, maybe your party lost. Now we know what the party's doing. Mm-hmm. That's the security. We know what the party is and what the party is doing. And so the one thing with Liberals is they do like to inject money into the system.
Yeah, you're absolutely right. And at that presentation, I shared with you that real estate prices are more tied to the monetary supply than anything else.
Yeah.
Right? Over 25 years, we saw the monetary supply go up by 5.8% precisely. And lo and behold, the Canadian compounded annual growth rate of real estate over the same period of time was 5.8. It's not a coincidence. And so, yes, the Liberals tend to be more modern monetary theory type. So they are going to inject liquidity. They are going to run large deficits, which will put upward pressure on asset prices over time.
So the past has shown us that when they do inject money into the system, it drives up inflation and housing stays with that. It's one of the reasons, one of the beginning motivators that even Rich Dad Poor Dad talks about is if you own housing, you own an asset that's going to stay with inflation. Whether inflation goes up or down, it's going to be worth what you need it to be worth when you want to use it, right? Mm-hmm.
It's the perfect hedge, but then you add in margin. Now, because you can own real estate on leverage, that's where it becomes a great investment.
Yeah. Yes.
Now, where do you kind of see that whole system playing out? Because as they run larger deficits and print more money, that will create this inflationary pressure. Do you think we're going to see a situation kind of like in 2022, 2023, where they have to now start increasing rates, even though the economy's kind of shaky, just because those inflationary pressures are so high? Or is it going to be a lot more tampered out? What's your kind of take on that?
I think everything we're going to see from a minority government is going to be pretty tampered. I think that Carney, being a central banker, he understands the cause and effect of things, and I think he recognizes that he can't do anything too spicy. Otherwise, we're going to find ourselves in a snap election. So you can probably expect that everything they're going to do is going to be pretty grindy and very incremental. Now, everything I'm seeing suggests we'll probably see a continued downward trend on interest rates. Probably another 100 to 150 basis points before the end of the year, which is going to drive down inflation, right? Because one of the biggest pieces in that basket is housing cost. So there's an offset, right?
Exactly.
And there will be a lag before prices go up. There's usually a decent lag. So he'll get, a decent amount of good stats on him bringing inflation down before
we see the ramifications,
the corresponding effect of the extra currency.
What you're talking about is the perfect storm, and we're going to explain what that means when we come back. Welcome back to The Real Build. I'm your host, Jamila. We've got our co-host, Andre, with us here today.
Hello, everybody.
And a really special guest, AJ Hazzi. Thanks for joining us.
I'm having fun.
Now, right before the break, we were talking about, liberals are here. Liberals like to inject money into the system. We think that, interest rates are probably going to come down a bit more. When money's injected in the system, inflation goes up. Houses typically go with that. We love to see a nice, slow increase in inflation year after year. That's a beautiful thing. And I mentioned that has kind of created the perfect storm right now, because you also have lots of inventory of houses, a competitive buyer's market. You're not going to get anything like dirt cheap unless you go on AJ's Ugly House Tour.
Can you tell, before we get into it, can you tell us a little bit about the Ugly House Tour and what you do there?
Yeah, you bet. So what we do is we try to identify, say, a handful, 5 or 6 properties that have some latent value, meaning that, they're ugly at the moment, but they could be titled up to reach their highest and best.
Yeah.
So we'll go out with a group of investors and tour these properties, and then between the properties, I will get my clipboard out and I'll go through and say, okay, based on what I saw, I think we would need maybe $100,000 to do the facelift here. And I think if we did that, we would see an after renovation value of X. And I think we could maybe increase the rents to Y. And then, work through the math on how you would go through that process, potentially refinance, get your capital out, and go do it again. So it's really this idea of finding ways to force appreciation and add value and rescue properties that have a ton of potential but have just had some deferred maintenance and been let go a bit.
Yeah.
Love it.
So and refabbing properties, cleaning them up, put your money in, clean it up, get it reassessed, pull your money back out. This is a legitimate strategy in real estate. It typically has been easier in the States because of their loose lending policies. You can actually do this in Canada?
Absolutely. I mean, that is really has been the linchpin to the entire portfolio I've built. It's just been adding value and then re-advancing the capital so we can increase the velocity of money.
You've got an Ugly House Tour coming up, don't you?
We do. We haven't set a date yet, though, but you'll be the first to know.
Okay.
We want to go.
Yeah.
Maybe we can
Absolutely.
report. We can talk through it and cut a little show together while we're looking at all these houses.
That'd be fun.
Yeah.
That'd be fun.
Yeah. Okay. So
back to the perfect storm.
Perfect storm. So, and I think to really hit the nail on the head with the perfect storm, AJ talked about the cycles when he started his career in 2003 and then into 2008 and then really ramped through 2012 with purchasing homes in those specific spots, because if you remember at that time, most people thought the sky was falling and the world was over. And it's very similar to the feeling that we have right now in real estate. And so, what we're trying to say is the perfect storm to buy real estate. Houses.
You're absolutely right. But you have to take the contrarian approach. You have to be, greedy when others are fearful. Right? And so what we're seeing now, obviously prices have come down almost 20% since the peak in 2022. Prices are soft. You can still get great terms, great discounts. And then now on top of that, we're going to see cheap money again, right? And of course, they are going to, run deficits and inject more cash, but the appreciation is going to be on a lag, which maybe 18 to 24 months potentially.
Yes.
So you have this opportunity window where you can still acquire, get great deals, and you know that the next part of the cycle is going to be the boom. So you get to go through that entire period. And so from trough to peak, the average from the last 3 cycles is 86%. Now, when you own a piece of real estate on margin, especially at the values today where the average single family home is $1 million, right? To get an 86% lift on that, right? That's $800,000. You might only have $200,000 or $300,000 of your own money in that deal.
Yeah, you're getting a 4X.
You're getting a 4X.
Yeah. And, I've been told as a real estate investor, I get told by investor guys like, oh, your money should be in the market. And I'm just like, listen, I put some money into a house and then somebody else pays me for the next 20, 30, 40 years. I can't convince somebody else to put $12,000, $13,000, $3,000 a month into my RSP or my investment savings portfolio. So that's the key. That's the piece. And if we put some of the pieces together from this show today, one, you got a lack of 4-bedroom plus houses that are renting right away, still at top dollar. They haven't come down in price. You've got a city, if you've been listening to our previous shows, you know that they've reeled back on producing single-family home properties. They're into densification. You have a blanketed city, province that has densified every single-family home. So not only can you buy this asset in a competitive buying market, so a good price with cheap money coming, so keep it as an open mortgage. You can rent it at top dollar in a competitive rentable market. You can increase the value of it with trades that are sitting waiting to go to work right now. And you can have someone else pay it off for you for the next 20 or 30 years. It's just really the sweet spot right now.
This is where all the millionaires will be made for the next generation.
That and crypto. But that's a different show.
On previous episodes, we've kind of talked about Kelowna almost emulating like a small cap stock because we have such a small inventory. Our population's not huge. The Okanagan Valley, I think, is around 500,000 total, and that's going out to close to the U.S. border and all the way to Coldstream kind of thing. When we start to see changes in the market, when it starts to go and the velocity starts to pick up, then you get these bigger swings. And any sort of pressure or any sort of injection that happens into this market, it seems like it creates these lopsided swings in either direction just because it is so sensitive to new inventory. It's sensitive to new buyers. It's sensitive to capital injection.
Yeah, you're absolutely right. And just like how Bitcoin's getting less volatile over time as it grows, Kelowna's market is the same. As we get more diversified in our economy, as our population goes up, we're seeing less volatility in the market. However, you're absolutely right. We're still a small center, so a change in the supply and demand dynamics can have a pretty sizable impact.
Well, I mean, 2008 definitely felt harder than it feels right now in Kelowna.
Yeah.
Yeah.
Without a doubt.
Yeah. Yeah. It was stagnant for a long, long time. And I think you're right. Like 24 months is going to be this beautiful window of opportunity. And people might tell you you're crazy. But I agree. These are the tea leaves I see. And, take it or leave it.
By the time people tell you you're not crazy, you've already missed the boat.
You missed the boat.
That's just it.
Yeah.
That's true.
Yeah.
Other than the single family houses, what other kind of areas or opportunities do we see with, the current political climate that we're going to have for the next little bit and their agendas and policies?
Yeah, the big opportunity right now is in Vernon with purpose-built rentals. They need rental supply like crazy. So we're actually building right into that 100 units to try to add some very necessary rental stock. Their vacancy is below 1%.
Still?
Yeah, their rents have gone up double digits year over year.
Okay.
So they need product. And there's obviously great incentives through the federal government program right now. You've got the MLI Select that'll give you 50-year money at extremely low interest rates at huge margins, only 5% equity. So, I mean, you can build a $50 million building with a few $1 million of equity. That's an opportunity of a lifetime.
Right.
Well, and that's interesting because, that's the exact flip scenario of Kelowna. Vernon is only 45 minutes away from here. So a lot of people have done this exercise in Kelowna because Kelowna is well known. People like to have real estate here. And then Vernon has been a difficult municipality to get things through and get things going. They've been later to the table to wanting to increase density into their city, which is fine. Every city is very different, but I can see why they now are at this boiling point where we don't have a choice. We can't stop. The government has great incentives for people who want to create this product and a really good opportunity. So you're doing a 100-unit building there?
Yeah.
Amazing.
So I was at the UDI event, which is the Urban Development Institute, and they're a big liaison between the private and the public sector. And at this event, we had the city planners of all the sort of local Okanagans. We had, Penticton, West Kelowna, and Lake Country were there.
Yeah.
Vernon was absent, but I would suggest they're probably no different. They all recognize right now that to get unstuck, we're going to have to play nice in the sandbox. So this isn't gouge the developer time anymore. This is recognizing that developers need certainty. They need certain incentives. They need to be able to pencil out projects.
Yeah.
And they need to be able to know that if they go, there's a little assurance around the timeline and that it's not going to be a moving target with respect to DCCs and all the other costs. So they get it. They recognize that there's no way a city can operate because property taxes are only 1/4 of the revenue they need. So they need the development game. They're very intertwined. So looking at developers as to the rich, big, bad enemy is not the way to build a city. And they recognize this now.
I can tell you as a developer, that's not the case. Anyway, they have cut the red tape, and they're probably going to keep going. So we're going to wrap up, take a quick break. When we come back, we're going to keep going on the hot spots you should look at, AJ's tips for real estate investing, and how to go get that liberal money. Stay tuned. Welcome back to The Real Build. I'm your host, Jamila. We've got our co-host with us today, Andre.
Hello, everybody.
And super special guest. Probably one of the most, I would say, successful real estate investors we have locally right here in Kelowna that we can talk to, AJ Hazzi.
You're giving me a big head.
Does it get bigger? Sorry, I had to.
I deserve it.
So we've been talking today about really real estate investing, cycles in the market, where the market is right now, what it means with a liberal government that does like to spend money and inject money into the system, and how we think that's going to cause interest rates to come down. We've got housing kind of bottoming out. The Kelowna market especially, older single family homes, that 80s box house, which I learned is actually called the Vancouver Special.
That's the one.
Great opportunity. They're still built on large lots in a lot of our communities here that are now zoned to put 4 or 6 doors on it. And we're still getting top dollar for those 4-bedroom homes that we rent out. If you are interested in more information and how you can get these homes, Vantage West Realty is AJ's brokerage there. And they also have property management available, so they can full turnkey help you manage this investment. Correct?
Absolutely. And we can help you take a look at, how all of the economics would work from, buying it to how you might finance putting, rental suites in the back and how the whole thing would work in terms of equity takeouts in the end, and really consult you end to end because we are investors and we are also developers. And so we kind of know how to, put the whole thing together for you end to end.
I love that. And it's super important because not all realtors are investors, right? Buying a home and buying a real estate investment is a different mindset. It takes a different team of people. You got to have a business plan behind it. It's something Andre and I talk a lot about on this show because we are developers and we are builders and we've sold new product. We really see a bigger picture and we invest and we're property managers of our own properties. It goes on and on and on. You see the bigger picture of what's happening. And there's not a lot of people that see that big picture out there.
You're absolutely right. I mean, there are two different skill sets.
Yeah.
To manage the process while people are moving, it's a very emotional time, and there's a skill set for that. Mm-hmm. But to manage investment real estate or, construction or development, it's math-based, it's logic-based, and you have to understand how all those different numbers play together, and not everybody does. It's just not something that most realtors have invested the time to figure out.
Mm-hmm. Mm-hmm. So, it's great time. Now, right before the break, I said, let's go get that liberal money. What I meant there was, when I look at politics, obviously I have the who I went out and voted for, and now we have a winner. And at the end of the day, what you get is what you get. Don't get upset. Play nice in the sandbox. This is Canada. We have really great policies across the board in all of the different parties. They all had different motivations behind them, especially when it comes to housing, because it is still the top topic of politics on how we're going to create more housing and make housing more affordable. So there was four parties. Well, it was more than four parties. But the two parties that people talked about the most, both had really great platforms. So now the key is to set aside the differences, understand what that party's putting money into in your industry, and go get it.
Yep.
Right? And when it comes to housing, the Liberals have already shown that they have invested a ton of money and research to go in a direction with housing. The MLI Select program that we talked about before the break is an excellent example. There was years and years of work that went into how they could create this program and bring it to the private sector to go ahead and run with it, because in a weird way, that's the last thing the government wants to do, is let the private sector go make some money on their money, which it blows my mind. But anyway, that's also another show. I'm ranting now. I'm going to slow down. But one thing the Liberals are going to continue doing, I think, is the MLI Select, and investing in companies that are going to bring rental product to the market. So if that's something you want to look into, you got to find a good mortgage broker. They all have access to this stuff. It's a matter if they have become educated in this space. So ask them the questions.
It's definitely a more involved process.
Oh, yeah.
Getting this type of mortgage.
Yeah.
The other thing to say is that on top of the MLI Select program, the federal government's created a number of other coupons, if you will, that make this even more juicy.
Okay.
So you've got no GST on the construction, which if you're only putting 5% of your own money in the deal and suddenly the construction's 5% cheaper, I mean, that's a pretty significant, that's a double up right there.
Yep.
And then they've created what's called a CCA allowance, which means for 5 years, once this thing's cash flowing, you can depreciate the building's value and wipe out all of your taxable income, which again sweetens the pot. Mm-hmm. So there are some pretty pro-business things baked into this policy, which is designed to incentivize this rental stock that they so badly need.
Mm-hmm. Mm-hmm. The other thing that they dangled during this election is prefab.
They did, yeah. $25 billion in investment projected.
So this is an interesting area. If you're in the industry out there and you're listening, I would really perk up when I hear the government saying, I'm going to put $25 billion over the next 4 years into increasing the production of housing in a prefab format. Now, they did already have in BC an innovation program where you could apply for, it wasn't a grant, it was an interest-free loan where if you were doing anything to innovate prefab construction, you'd be able to get your hands on that money. And that also included building out a prefab product and going through that. So this tells me stay top of mind to they're going to be investing in people that are going to create prefab facilities, that creates prefab technologies, that is going to build out prefab communities, and that's going to run with that concept. So the prefab communities thing, that's I want to watch that. I want to see.
I think prefab can be, I think it's going to be very useful in specific select scenarios. Mm-hmm. I don't know if it can just be blanketed across like the entire country, for example. I know like in Kelowna, grade change is kind of the enemy of prefab, because then your site work and what you have to do to support that prefab building might actually end up costing you more than if you were just planning for a stick frame construction. And so the innovation of it is definitely going to help the adoption. Mm-hmm. I'm curious to see where it goes.
Yeah.
It could use a bit of a rebrand from a marketing perspective. There's
Absolutely.
A lot, I think about this a lot, and I think, if they were to change it to like controlled environment construction instead of prefab, because I think a lot of people have these connotations, right?
Yeah.
And so if
manufactured home is exactly what people think.
And so they think it's got to be discounted to, I don't know if I want to live in a prefab.
Exactly.
But it actually costs more to produce right now.
Right. But think about it. If a controlled environment, you would want your construction to take place in one of those. And certainly if you can get non-combustible materials, the operating costs would be much lower. Like there's some advantages to this stuff if we can get it there.
Yep.
But I think the biggest advantage is shortening the construction period.
That's the huge.
Yes.
Right?
Time is money.
It's the cost, your carrying cost through that period. And of course, if you can decrease labor cost as well, you can put a really nice product out at a lower price and still have margin.
Yeah.
Yeah.
That's
Yeah,
what we all
that's-
want at the end of the day.
And I also saw, I was just reading up yesterday, there's a few other policies out there, and we'll probably have other shows on it, but
We're going to have to do another show because we're
Yeah.
out of time, folks.
Yeah.
AJ, thank you. Really, really special to have you on. I don't think you knew I was such a fangirl before today.
Well, I am proud and I had a blast. So thank you.
All right. Well, until next time, stay tuned. Thanks for listening.